What's up? Let me know if you wanted me to do a DCF. As you know, that's what I do. Every video I run my DCF model and then I talk about the company's financials. So I like to do live streams that kind of breaks things up. I always look at the biggest gainers and losers each day. Do you do that too? Like this is as of Friday, so, and it's mostly like small cap stocks, because if it was $100 billion company, it probably won't move 50% in one day. Small caps may move like 11 million market cap. This went up 56%. And it's generally not based on fundamentals, because big movements like this, it doesn't happen because the company is selling more products. It generally happens due to some type of like either inefficiency in the market, or just hey Alex, what's up? Or just you know, a boatload of people just got into the stock at one point, or a lot of people left the stock at one point. But the most common thing I've noticed on like these big gainers for the day is biotech companies. There's so many biotech companies, like thousands of biotech companies. Hey, Chris. And usually if they move closer to commercializing a drug, because the FDA has 4 phases, and this is good to know because it's kind of basic knowledge about the drug, how drugs work. And if you invest, there's a lot of companies in the drug industry. I mean, there's some big ones like Pfizer, and there's smaller ones too. So yeah, so there's usually 4 trials, like phase 1, 2, 3, and then phase 4 is commercialization, when you could actually sell the drug. But just by passing a phase, if you just complete phase 1, the stock may go up like it does sometimes, like 50, 60%. I mean, a Pfizer won't go up 50% because they passed phase 1 or phase 2 on a particular drug. But a company with like 50 million market cap that only has 1 or 2 drugs in their pipeline, that's going to really move the needle, right? So before even selling anything, because you can't sell it legally, you can't sell anything until you pass all 4 phases. But just by passing phase 2, you're one step further than most drugs, right? Because a lot of drugs fail phase 1. A lot of drugs don't even make it past preclinical. But each time you pass a phase, you're getting that much closer to monetizing your product. And but oftentimes companies pass these phases in like phase 2, and they don't pass phase 3, because each phase in the process you have to oh yeah, PACCAR. That was new to me, PACCAR. I didn't hear about that stock. I think I heard of, I'd say like 90% of stocks with like 100 billion market cap I heard of. I've been looking at that stock since 2021. I look at so many stocks, and then when they go up, I'm like, oh, I should have bought it. I was looking at it. I should have bought it. But there's so many stocks that went down that I was looking at too, and I never think back, oh, thank God I didn't buy it. Well, sometimes I do, but I kind of forget about those moments. Barry wrote something on it years ago. Kevin, what's up? So Nike. Yeah, Nike. Nike's just really getting clobbered, right? Damn. So I'm working on 4 videos in the grocery industry. This week. 20%. Yeah, it was already, well, actually, I remember it was going down, and then it started moving up, but now it's going back down. Wow, this looks so much different. Like the formatting changed. That's so weird. Let me do it again. WBA, that's a killer, right? WBA. It's back to 1997 levels. So if you bought it in 1997, the price you bought it at is the same as it is today. 27 years. I mean, you did get a dividend, so it's not like you lost money, but you're not up on your, at least the cost basis of your stock. Yeah, so this week I'm doing 4 videos, maybe 5. Kroger, Albertsons, Krispy Kreme, and Grocery Outlet. So yeah, Nike. It's so hard investing in brick and mortar retailers. It's such a risky industry. And Buffett hates brick and mortar retail. He doesn't like to invest. And Charlie Munger was trying to get him to invest in Costco for a long time, but he wouldn't. He probably should have. It was a good investment, but I think he saved a lot of money from avoiding a lot of those companies, because so many go bankrupt. And it's getting worse, especially it's frustrating because people can walk into a store and steal stuff and just walk out, and nobody can do anything. Even the security guard can't do anything, which is ridiculous, right? It's so frustrating when you see people do that. Snowflake. Oh yeah, Snowflake. Now, I don't like Snowflake. Maybe I should. We'll look into it, but I didn't really like it when I looked at it last. Oh, Nike used to be the top shoe company because of I think Jordan, right? That was the main they weren't that big before Jordan, and then they became the largest. Okay. Nike does more. Nike does have retail, right? There is Nike stores, but I would call them mostly a wholesale manufacturer than a retailer. $5.1, 5.3, 6.4. I'm sure it's undervalued. No, that's surprising. I thought it'd be undervalued. Is that $75? It came down to 75. Wow. I remember when it was 90. I guess that was pretty recently, right? Last week. I remember I was talking to somebody about it. They went from like 120 to 90, and we were talking about buying it. Well, somebody else was talking about buying it, and I don't know if I don't think he bought it, but I was saying, no, I'm not going to buy it. I still don't think it's a good price. And I guess I was right, but I mean, you don't know the future. I mean, if it's 200 in 2 years, then 90, it was a great price to buy it. Like, I don't know, or it might bottom out more. It might come down to like 50. It's just it's a killer retail. It's really a killer. It's just getting so much worse. Not only it's hard. It's so hard to scale because you have to build out each store, right? Even if it's in a shopping mall, you have to staff each store, and then you have to maintain the staff, and then you have to. There's just so many logistical things you have to do, not to mention theft by the merchant I mean, theft by the customer and more common theft by your employees. So you have to deal with that too. And it's just so much easier to make the product and sell it and not have to deal with like having to like, sell it to the retail store, not having to deal with like the customer, the end consumer. I'm surprised it's still. Why is it still overvalued? Maybe we'll lower the WACC a little bit, because a lot of times with these DCF models, like these will be my future free cash flow estimates, but the company may come out next quarter and say, "Oh, we're doing better this quarter, so we're raising our guidance." Usually, they raise the guidance for the current year. So if the guidance for the current year is probably close to 5.1 billion, because that's what. So yeah, according to Simply Wall Street, 8 analysts project 5.1 billion for 2025 revenue, and usually they get that from directly from the company. The company, I think most companies, maybe not every company, but most companies give guidance for the following quarter. So once they release earnings, say they release first quarter earnings, they'll also give guidance for second quarter and full year earnings. And every quarter they keep doing that. So the numbers get adjusted based on the new earnings. I don't know if events and presentations, like the quarterly earnings. So they completed 2024 because their fiscal year ends on it doesn't end in December. Yeah, I think so. May 31st is their fiscal year. So they completed 2024. They're starting 2025 now. Byron, yeah, no problem. If you posted all the food on social media, then it's a tax deduction? No, I don't understand. Are you just joking, or are you serious? I mean, you could. It is a tax deduction if you. Oh yeah, actually no, maybe it is. It's not COGS though, because COGS is maybe it's cost of revenue, because COGS is technically like if you sold the food, if you made food in a factory and then sold it, COGS is the cost of the products, the cost of buying the ingredients. But cost of revenue is more like a service. So if you use the food in order to make videos and you made income from those videos, yes, then yeah, I think you can make it a cost of revenue. Although it's funny, the IRS, because you're supposed to report income, I have to report income. So all the income I make from YouTube, which is pretty much my ad revenue, because YouTube gives me a 1099. Well, Google sends me a 1099 at the end of each fiscal year, and they say my income. So it's like it's nothing. I mean, it'll probably make 3,000 for the year. Make like $200. I mean, at one point I was making 1,000 a month. So say this is my income for 2023, according to Google on my ad revenue. So I don't even write off anything, but my accountant asks do I have any expenses for my YouTube revenue? I mean, actually, I probably should, because I do pay for like Simply Wall Street. It's like $200 a year for this streaming app right now. I have to pay. It's like $20 a month for these things, like the streaming. Simply Wall Street. It's like, I think they're all like $15 to $25 a month. These things. I mean, I bought my computer, but obviously, my computer is not just meant for making YouTube videos. If it was, I guess I could write off my computer. But like, you can write off if I use my home to make videos, I could write off. I can't write off like how much I pay on my mortgage, but if I say my room is like 10% of the house, and it costs me, $3,000 a month, so I could write off $300 a month for my room. But that's kind of getting nitpicky. But you can write off whatever you want. But the thing is, you have to show some income. Like I have $3,000 of income, and if I wrote off like $5,000 of expenses, because you can come up with anything, like you said, the food thing. Like if I'm drinking this shake right now. I'm not talking about it, but the IRS doesn't like to see you just passing through enough expenses to bring your revenue to zero, because then you don't pay taxes. So as long as you show some profit, you could probably just fudge your numbers. As long as it's somewhat justifiable, you can. Because I was looking at businesses, like I was looking to buy like this gym. Me and my friend were looking to buy a gym, so I asked the owner to see their financials, and when I looked at it, like he reports his income, memberships from the customers at the gym. Then he has classes, so he shows like revenue of like $10,000 a month, and then his expenses were like $12,000 a month. So he was like reporting like a loss, and I'm like, why would I want to buy the gym? You're losing money every month. Agav, what's up? And he's like, no. I put in my kids' tuition is like $4,000 a month, like $2,000 per kid at the private school. So don't include that in expenses. So, you can do anything you want with taxes, but if you get caught, the IRS audits you. Like if that guy gets audited, he has to pay a lot of penalties. Not only the taxes he should have paid, but then a penalty for lying to the IRS. But anyways, so how could I was hoping they would show what the forecast is for the future in this. Let's see if this is. No, that's what I was looking at. Let's. I don't know. Maybe Nike doesn't give their projections for the future. So that's interesting. So yeah, see, it still seems overvalued, even at $90 or $75. Maybe the analyst forecast came down. What was it? WBA? Sprouts. Yeah, Sprouts. I should do Sprouts because I'm doing that industry. I want to see Snowflake. I mean, you can really write off anything, but if you get audited, you kind of have to explain. But it's unlikely to get audited. But like I was saying, like this guy, if he got audited, he would get in trouble because he's reporting monthly revenue of 10,000, expenses of 12,000. And when you see 30% of his expenses were his kid's tuition, which has nothing to do with the business, he's going to get, slaughtered. But if another business had 10,000 of expenses, right, of revenue, and then say their regular expenses were 8,000, but he just added 500, his electricity bill at home, he just paid that through the business. So he added $500 to his electricity bill from home. So instead of reporting 2,000 of income, he reports 1,500 of income. The IRS probably won't care about that. And even if he did get audited, that probably won't even show up too much because it's not a big number. If in this case he's passing through 4,000 of bad expenses, that's significant. But if you like, I went to Costco when I had my mathnasium, and I would buy like a couple $100 of stuff for the store all the time, like snacks for the kids. And then I would throw in like my own personal stuff. Because if I bought toilet paper, of course I need toilet paper for the store, but I'm going to use it in my house too. So even if I got audited and I saw toilet paper, it makes sense. But I can't buy like a wedding ring for like $10,000 at Costco and say, "Oh no, that's for the store." I had to give it to one of the kids wanted to buy for his mother. Fang winning and more winning. We'll keep going. Snowflake 135.45. Does anybody like Snowflake? %8 whack. Snow. I hope they have positive free cash flow. But I was doing the bookkeeping for a company that always lost money year after year. And then like the IRS ordered them once saying like, what kind of business is this? Is it a legit business? All you do is lose money. And it was a legit business that just not ran well. So, the IRS is okay with that because you're allowed to run, not be good at running a business as long as you're doing things ethically. 900, 1.2, 1.7. It seems like a lot of things are overvalued these days. I guess the market is just getting too high. EBS. But I like to look back, like $85. That's my target for this stock. I'll raise it. I'll raise their future cash flows a little bit. Let's say 99 to be nice. I'm at 99. So it's pretty much trading almost at its low. This just goes to show you like it started out at 240. How's that possible? This just goes to show you Snowflake is $100 stock, right? So when it ran up to 400, it can't sustain that level. It can't be a $400 stock unless it's like Nvidia, like it just grows a ton every quarter, like it 5x's its cash flow. Most companies don't do that. Most companies grow their cash flow a little bit year after year, or maybe it falls a little bit, but most people don't double or triple their cash every single year like Nvidia has been doing. So it has to come down, and now it's trading close to intrinsic value. That happened with Tesla too. Tesla was so high, it came down about 50%. But some stocks like Amazon, the good stocks, they were trading really high, and now they're even higher. There is a pullback at some point because it gets a little too inflated. So there's a pullback, and then some companies just keep growing. So eventually it goes back up. Do you ever do a reverse DCF? I don't know. What do you mean by that? I think so, but I'm not sure if we're told the same thing. This DCF is powerful to that inverts the traditional DCF methodology. Instead of projecting future cash flows, it starts with the current stock price. It calculates it. Oh yeah, I do that on some videos. If I can't get to if the company has negative free cash flow in the past, I kind of like I force the free cash flow growth just to get the stock price at intrinsic value. Yeah, so I think it just says instead of projecting future cash flows, you use a current stock price and calculate the growth. Yeah, so it's just so they're trading at 135. Based on the cash flows, at least the analysts say it should be 99. But let's do what you said, which is a good exercise, I think. This is how I would probably do it. Well, let's put this down here. So this is billions. So 900 million free cash flow this year. Next year, 1.2 billion. Year after that, 2 billion. This is what I had initially in the model. But if we do the reverse thing, actually, to do a pure reverse, let's get their actual cash flows. So they actually had 798 million of cash flows in the trailing 12 months. Let's just keep it. Everything's in billions, so in case you get confused. Okay, so a reverse DCF is so I want to figure out what the free cash flows need to be in order to get the 135 stock price. So, and here's my growth right now is 5%. So 48 is obviously much lower than 135. So I have to raise this. If the free cash flow grows by 10%, what would the stock price be? It's just 55. Let's obviously go a lot higher. 20%, 30%. Jeez. Okay, that's almost exactly. So this is what their free cash flow needs to be in order for them to justify the 135 stock price. It has to be 1.2 billion by the end of this year, 1.8 billion, then 2.7 billion. And right now it's 800 million. So you can see how far off they are. But like if I did this with NVIDIA, if I had, if I showed you, okay, right now their free cash flow was 1 billion last year. They would need to be 6 billion to be a $1 trillion market cap company. And then they went up to 40 billion or something. So like it would be a pretty big growth, right? 50% growth is a lot, yeah. That's why it's not really worth, it's not a $45 billion market cap company. That's what it comes down to, at least at this point. But you don't invest on what the company's doing today. You invest on what they're doing tomorrow, right? If you only invested on what they're doing today, then there would be no think work. It would just be buying a bond, right? If you know the outcome. Nobody knows the outcome. Like if I was smart enough to know NVIDIA was going to blow up, I would have dropped $1 million in NVIDIA and then gave everybody the finger and said, I'm done. I'm not working again. I have $50 million. But who knew? Yeah, it's crazy. So cloud, let me just make sure I remember exactly what they do. Cloud. Okay. Okay. So it allows users to store and analyze data using cloud-based hardware and software. Snowflake's services main features are separation of storage and computer. Okay, so they store data in the cloud. And their service runs on AWS. Because if you're offering a cloud-based service, you have to be able to connect to Amazon Web Services, at least. If not them, Azure, because that's half the cloud market right there. Amazon Web Services is like 35% of all cloud websites, and then Azure is like 20%. Then Google is third. I think they're like maybe 10%. I saw your video on John Deere. Then a popular YouTuber made a video on John Deere. They were focused on how John Deere has transformed into a tech company instead of an individual industrial company. I guess everybody's a tech company, right? Everybody uses computers. But right, I mean, you have to kind of be a tech company. You have to still make your products. Like you could manufacture, like if you're a tool manufacturer, you make hammers, you make nails, you manufacture those products. You have to use technology to manufacture it. It's not like the 1800s. So I guess everybody's a tech company in a sense. So I don't know, like I don't totally buy into like Tesla's not a car manufacturer; it's a technology company. They're a car manufacturer. I don't. I mean, if it was the 1980s, every CPA was using paper, right? Like if you were an accountant, you use paper to do people's taxes, and then fast forward to like the year 2000, everybody's doing it on your computer on QuickBooks. So you can't say every CPA firm is now a technology company, right? They're just using computers to kind of expedite and streamline what they did in the past. But yeah, I'd be interested. Yeah, maybe I'll check out that video. John Deere job openings over. Every company has to have jobs for software. Well, not every company, but most companies need someone who understands the software well, because that's how you get that's how you kind of like save money and reduce headcount. Because like if you were a law firm in like the 1970s, you might have had 3 lawyers and 20 secretaries, because the secretaries did all this manual writing on paper, typing on a typewriter, and it just took forever. And then if you fast forward, that same exact law firm with 3 lawyers and 25 secretaries, fast forward to year 2010, those 3 lawyers only need 1 secretary. And sometimes you need no secretaries if they can outsource it. That's how efficient computers are. MVIS, please, for value. MVIS. So yeah, so data storage analytics services. So they offer DAS, data as a service. I wonder why. I always forget what they do. Is it just because it doesn't make sense to me? Maybe. I understand data as a service. I just want to like a real world example of what you. Let me look at Snowflake's. Because like when you invest, if you can't visualize how a company makes money based on like reading what they do, you probably shouldn't invest in them. It's kind of like AI taking over the world. Like I do like it. I've actually started using AI for my thumbnails, so I don't have to pay anybody to do thumbnails anymore. And they come up with, but it's so hard to like imagine AI being like monetizing AI. Like if you own if you like the law firm, if you have a law firm with like a dozen lawyers and like 10 paralegals and a couple of secretaries, like how do you use AI? Like and like train people or people understand how to use AI to help their company. It's a big leap. Snowflake. Why is it so hard to find anything? Okay. A job to do my thumbnails. Yeah, I used to pay. At one point, I was paying somebody $20 a thumbnail, and then I paid someone like $5 a thumbnail, and like the number of views never really changed, whether I did it myself or I paid a lot of money or paid a little. Like it didn't really like. I didn't really ever notice. I don't know. Maybe I stuck with it. Like I stuck with some of these people for a year and let them do like my SEO, and like the only people making money are those people. I wasn't making any money because I was giving all my money for my channel and more sometimes to those people. No, I'm open to it. Yeah, send me, because I've kind of given up on trying to spend money on the channel, because I'm just like doing it myself now, because I don't make enough and I don't see it growing to a point where we'll make enough. You know those people who sell courses on how to find real estate. There's a million courses, and like it's only like $49, and it's like an 8-hour course, and they go through all these like steps and show you, and then maybe in the course there's like you can do one-on-one with the guy who's doing the course, who made the course, and he's like charges $400 an hour, or you can do one-on-one with the with one of his assistants for like $100 an hour. And you might buy this course, and most people won't spend $400. Maybe somebody will do a $100 hour session, and they probably feel like, wow, I learned a lot. But nobody, the only people who make money is the person selling the course. Nobody else makes money from buying and selling real estate from this course. And if you did make money from buying and selling real estate, it wasn't the course. You just happened to take the course. You probably would have been successful already because you probably knew what you're doing. But that's the thing. When people sell these things, like they sell these jobs, well, all you have to do is pay me $100 or $200 and I'll train you. So the only person who makes money is the person who's charging, not the person receiving it. That's how you know if you're going to make. You will never make money on a course. You'll never make enough money to justify the course. It make you feel better. Oh wow, I'm learning a lot about like real estate and learning a lot about whatever course I'm taking. But to turn it into something where it's all a bunch of scams. I know you said not to remind you, so I apologize in advance, but I'm interested in. Alex, thanks. I've kind of given up on I haven't given up on a channel. I've given up on like thinking it's going to be, because it's 4 years now, and it's actually it's growing less than it was. And I mean, I'm not upset about that. I'm just saying, like, so I'm making a lot less than I used to make. So I still make videos. I still like doing it because it keeps me on top of things. But I was really hoping for the first 2 years it was gonna turn into something. But it's fine, I just want to look at Snowflake. I just want to understand. I get data as a service. I mean, if you look at a company like a Nike, like I know what they do. It makes sense to me. They make products. Sneakers is the most popular probably, and they probably make like sweatpants and hats. I know they make stuff, and then you go to a store and buy it. It makes sense to me. Most companies, a lot of companies, it makes sense. Like if you buy Costco, I get it. I shop there, but I have a heart. I want to like even like Zim integrated shipping, like, or some like energy transfer. I get it. I get what they do. It's not as straightforward. Energy transfer. They have to. They contract with a. They contract with upstream oil and gas companies like Shell. Shell extracts oil from the ground, and then ET Shell extracts oil from the ground, but they need to get that oil from one part of the U.S. to another, or maybe they need to get that oil from Canada to Mexico. So ET has pipelines set up around the country, around the world, where they can move oil from one location to another, and the oil gets picked up. At one point of the pipeline to get it in there, you have to sometimes use truck. So that makes sense, even though it's not as straightforward as what Nike does. No, the sponsors, yeah, sponsors was the best. I mean, I'll show you. I don't know if you want to know. Now, I don't want to seem like I'm complaining or anything. Yeah, sponsors is the best because you get the most money. I thought like when I sold my business, I could grow. What the hell? Yeah, I'll show you how much I made. It's been over a year since I tracked this stuff. Okay, I used to track it every month. Okay, I don't know if anybody even cares about this. Okay, so May 2020, first video. So you have, I don't know the rules now, but when I started my channel, I think it was, you have to have 1,000 to get monetized, to receive ad revenue from YouTube. You have to have 1,000 subs. And correct me if I'm wrong, and 10,000 watch hours. So you have to have both of those things in place in order to get monetized. So you can buy subs, you know, but that doesn't mean you can have any watch hours. So obviously you have to have both of these things. It took me 5 months to get to 1,000 subs and 10,000 watch hours. And then once I got to that, then I get ad revenue from YouTube. So October 2020 was my first month, $144 of ad revenue. And then $303. This is just cumulative. 303 plus 144. I kept it in my phone every month. I got paid. Again, ironically, it was 303. I'm not sure how that happened. And then when it almost hit 1,000, and I was getting excited seeing it grow every month. And then I got a sponsor, which was great. They paid me $400 per video. It was, I think that they mostly work with Canadian small cap companies, but it was like an advertising firm. And they would, like if it was a stock, like say it was a stock, it seemed like a lot of like commodity stocks, like mining companies. Like if it was like a, I can't, you know, say it was like, you know, RX.TO, that's ticker. I don't know what it is. TO means Toronto Stock Exchange. So say it was like and it would usually be like a couple $100 million market cap company. So they would contact this advertising company, you know, the guy, you know, the CEO of this company or the marketing person at RXTO, and they would give them like, they would sign a contract with the advertising company saying, I want you to like find YouTubers to make videos, to make a video on my company. And what they would do is they would pay, let's see. So I would get, it was, I think I got $1 a view. Yeah, I got $1 a view. So, and no, it was 50 cents a view. 50 cents a view. And so at the time, my average view was 800 views. My average video at that point was like 800. So they said, so your average video is 800 views. So we'll give you $400. Doesn't matter how many views it gets. Even if it gets 50 views or 1 million views, they just give me 400 flat. And obviously we could renegotiate if things change. So 400 per video. I was like, 400 per video, you know, I make 40 videos a month and I get like maybe $400. Like $300, and I did a video every day. I'm like, yeah, $400, that's great. So I think they would pay the company like $1 a view. So they would probably give the company like 25 grand, and they would say, just make videos, YouTube videos of my company, but you have to get 25,000 views, and we'll give you 25 grand. So the company, because I noticed like when I did a video on RxTO, I would see a lot of other small YouTubers making RxTO videos. So the company would like pay me 50 cents a view and all these other people 50 cents a view, and hopefully it would sum up to at least 25,000 views. So they would like fulfill their contract with this company. So yeah, so that's how I got 1,600 in like 2 months. I did 4 videos. And in April 2021, so then it went up to $500 because I was getting more views. So $500 a video, but it was great. That's when I was actually felt like I was making money. I still couldn't pay my medical insurance. I still didn't have enough to. Well, 1,600 did, because it was 1,200 a month for medical, because I have my own medical. But yeah, so that my peak was $1,400 from ad revenue, and you can see. Oh, wow, 1,400 again. I think this 1,400 was sponsored. It says sponsors in there. I didn't like break it out. And you can see in 2022, it's down to like $157, $134 a month. So yeah, so individual medical insurance. So it's a killer. Because of medical insurance, it's hard for people to be entrepreneurs. It's just like it was my most expensive. Half my expenses were medical, because I don't pay for a house because I sold all my stocks right before COVID and paid off my house. So I don't have to pay for mortgage or anything like that. But all my other bills added up. My food, my gas bill for my car, all my other bills, the sum of all my expenses was equal to my medical insurance. So I'm happy to I even posted on my channel, if anybody wants to work with me, if anybody actually has, I'm not going to I don't want to work with someone who doesn't even know what they're doing like me. I want someone who who understands how to do SEO or designing thumbnails, something to bring to the table. And I'll split my ad revenue. I mean, we'll only get $200 a month each. Now it's I'm at $300, so $150 each. But I'll even split it because it's not going anywhere. But I don't want to sound like I'm complaining, which it probably does. So Snowflake. So let's see. So product revenue, 800 million. Services. So it's mostly product revenue. Let's see if they explain it, which they never do. They never explain things in layman's terms. There's always these hypothetical, high level, what does Snowflake do? Okay, Snowflake enables data storage, processing, and analytic solutions that are faster, easier to use, and far more flexible than traditional offerings. The Snowflake data platform is not built on any existing database technology or big data software platforms such as Hadoop. See, it's not very, I mean, I could kind of like read between the lines. Enable data storage, processing. I mean, I wish they would just say things in simple terms, not. So product revenue is a key metric for us because product revenue is primarily derived from the consumption of compute, storage, and data transfer resources, which are consumed by customers on a platform as single integrated offerings. Customers have flexibility to consume more than their contracted capacity during the contract term. Our consumption-based business model distinguishes us from subscription-based software companies that generally recognize revenue ratably over the contract. Because customers have flexibility in the timing of their consumption, I don't know why they always make things sound more complicated than they are. Like, what does Coca-Cola do? Coca-Cola provides a liquid beverage to satisfy the thirst of people around the world. Like just to say what it is. So Snowflake, they work with big companies. I think they work with big companies like Amazon, or do they work with individuals like me and you who have a website for data storage? Okay, so their customers are Xerox. So I guess because I know Costco's customers are like me. I know I'm a customer of Costco, and millions of people like me are customers of Costco. But if you talk to like a what was that company? John Deere. John Deere's customers are like retail stores. Retail stores buy it from John Deere, and those retail stores then sell the product. Snowflake is a SaaS, but it said, well, on Wikipedia it says it's a DaaS, data as a service, not software as a service. It allows companies to use Snowflake to process or house their data instead of the companies having to do that on their own. Right, I get that. You store your data in a cloud. I guess if you have a lot of data, like I guess I'll just leave it as it is. I don't think we'll get to the bottom of. I guess it's for companies with a ton of data. So what other stocks were people saying about? Asman, what's up? So right, Alex. So if I could just get a sponsor, that's how you make money. Like most people, like some athletes, sponsor. I remember seeing athletes sponsor. I remember seeing athletes who make hardly any money in their sport and make like 100 million in sponsors. I can't remember what athlete it was. I think it was Usain Bolt. I think he made like $100,000 as a runner, or not, or maybe not even that much, but made like 100 million as a sponsor. Because some sports you don't make a ton of money. Although most major sports you do make a lot of money, especially like baseball, football, some golfers. But there's some athletes who didn't make any money, like Michael Phelps, in his sport. Like there was no prize, there was no like salary. Like when you're in Olympics, you don't really get a salary. You might get paid a stipend. But from sponsorships, he made like a ton of money. So yeah, so that's really the goal of any. I can't do it. Let's pick a non-finance company. It's just too hard. Pets. What a terrible investment. I'm trying to like do things outside the box. Like I try to like do a little more due diligence and try to find something that was a little more unknown, and then I get burnt every time. So I should just stick with the basics and not try to like come up with something new. I saw that they were paying. They removed the dividend. They were paying like a 14% dividend, and they covered that dividend. So I thought it looked good. $83 million market cap. And what they do, I understand. If somebody wants a prescription for their pet, they go through PetMed Express. But they're projected to have negative free cash flow. I guess just they're losing too many customers, I guess. Their revenue was $233 million in 2013. Now it's $281 million. It was higher in 2020, $311 million. And their free cash flow was pretty strong. Recently, it's negative now. They had their first negative. But I thought they were a lean company. So it seemed like it's a scalable business. Like just filling prescriptions for pets. I don't know. I don't really like utilities too much. Materials. So let's see if they get back to 20 million. Let's see if they get back to 20 million of free cash flow. Bye. So let's say they have negative 5 million and then negative 2 million, but they get back to 20 million, to where they were a couple of years ago. Then it's a $15 stock. I don't know if they'll get back to that level. And their WAC is, we can use the lower WAC too. $15. So why are they losing so much market share? Wikipedia is good. It gives you like some, okay, it sells prescription and non-prescription pet medicine. It only fills prescriptions written by vets. So they compete with veterinarians, because some veterinarians generate their income from selling pet medication. I mean, there are some vets that just treat the animal and don't handle fulfilling the prescription. Like a lot of doctors just treat you. They don't have like a pharmacy to make the drugs. I mean, a big hospital, if you go to Kaiser, it does. But if you go to just a regular small doctor's office, they're not going to be able to give you any drugs. Maybe they might have samples on hand, but to fill your prescription and to get it every month, you have to go to like a CVS. But I'm sure veterinarians are a little different than doctors. It's probably hard to make as much money as if you were a doctor, being a veterinarian, probably. So some of them. But there's a lot of negative things if you read about the company, which I didn't really even notice before I bought it, which I should have. So it started in 1996. He was an anesthesiologist who wanted to open up mail order business for human prescriptions and sold pet accessories. He shifted to pet medicines due to Merck, the competition from Merck that already controlled the human prescription market. So less competition. But yeah, but there was some like, where's the negative stuff? Okay, so from 1999 to 2002, PetMed Express and Save Max were charged with violating the law in several states. In one instance, they were fined by the EPA for selling drugs in metric doses and also received a warning letter from the FDA for selling misbranded drugs. They used to sell accessories like leashes. I don't think they do anymore. So yeah, again, they were fined by the EPA for selling drugs illegally. So the drugs were made by Novartis for sale in Europe and Australia, and the doses and labeling were not FDA approved. Because sometimes there could be a drug sold in Canada, but it's illegal in the United States, like a perfectly good drug that other people take in another country, and for some reason in the U.S. it's illegal. So you might have to go to like Canada or Mexico, wherever that drug is sold, and then bring it back here. But you obviously can't sell it to anybody else. You can take it, because you're not going to get in trouble for taking a drug. No one really cares about that. In 2004, so in 2004, there was a lawsuit filed against the company claiming that the company was not candid about the difficulty in getting prescriptions authorized by veterinarians. Another shareholder filed a lawsuit against the company in 2018, claiming that it marketed dangerous animal drugs to humans. The lawsuit was later dismissed. Okay, I guess that's all the negative stuff. You don't need a script. They just sell everything over the counter. Yeah, I mean, in some countries, there's just less regulation. In the US, it's just everything is like everybody wants to sue somebody for something. So like it's so litigious in the US. So you can't you can't even blink the wrong way and then you get sued. So you have to take so many precautions. I mean, you can go into like a McDonald's and like sue them if like the coffee's too hot or the burger isn't cooked fully. I mean, you could sue for anything. I mean, it might be a waste of time, but you can still try to sue because sometimes you sue for stupid things, and it gets through. You got lucky, and you have a good lawyer, and you get like they settle with you because most of the times it doesn't go. If you sue someone, they don't want to take it to court and go through all that hassle. They just want you to give them like money, like. Fine, we'll give you $50,000. Just drop the lawsuit, and we don't have to waste money on legal fees. So when I bought the stock, let me see when I bought it. So August 2023. So not quite a year. I mean, now it looks like a bad investment, but who knows? Who knows what's gonna? So I got it. I thought, let's see. Okay, so it was over 50 in 2017. And then you can see so even back in July 2020, it was over 40. And they were still paying a pretty healthy dividend. And I saw in August 2023 when I bought it, it was down like 50% in like the past 6 months. So at what point I mean, it could go to zero, but I was hoping it would go up. So at what point? So now it's getting even lower. Let's see. So now it's like what, $4? So it's trading back. It hasn't been this low in 20 years. It even IPO'd. It IPO'd for $850. So it's half its IPO price. But in 2001, it got real low. I think they thought they could go out of business. It was down to 30 cents. And I think they got delisted, right? But then it started growing and then came down. But yeah, how low is it going to go? Is it going to go to business? I don't know. But I didn't buy any more. I bought, a good amount of money. I think $50,000. So I'm down $30,000. No, 20,000. I did 20,000. So I'm down to 6,000-7,000. But anyways, it was that dividend that got me. I was like, wow, that's a good dividend. And they have enough cash to cover the dividend. Yeah, I could sell my Berkshire Hathaway stock and buy the company, right? I can't buy the company, but 83 million, that's a little rich for me, but yeah, I mean, there's no way I'm going to sell my Facebook stock to buy that. I mean, I don't know. I mean, if the stock goes up, if the stock went back up to $40, then of course I'll be like, oh, I should have just put more money into it. I said that about Facebook too. When it was below 100, I didn't put any more money into it. But everything is after the fact. It's it's so obvious after the fact. Oh, I should have just put all my money to NVIDIA. They completed their fiscal year? Maybe I should do a video on the company. Okay. It's so hard to read this stuff. I feel like it takes forever. I just want to look at the... Okay. Okay, sales are up. 62 million, now 66 million. That's good because I think it was a trending down. The sales are trending down for a while. This doesn't show quarterly. So it peaked in 2020 and it was coming down. Its peak was 311 and then it came down to 256. That was in March 2023. So 256 is where it was in 2017. So now it's coming back. It's back to 280. It's still trading, it's still below its all-time high, but at least it's coming back up. Because when a stock goes down, there's usually a huge sell-off. Like when Meta's revenue, I think, went down, and especially when their profits went down because of the metaverse, that's when it was a huge sell-off. But it came all back. It came back and then some. So they're doing fine. But that's good. Even so they're up for the year. It was 256 million in 2023. Now it's 281 million. So this looks good. This gives me hope. It's still so hard to buy the stock when I'm down so much. They have positive gross profit, but they still have a loss though, a net loss. They're spending more in G&A and advertising. But let's look at their cash flows because I have a feeling they do have positive cash flow, but it's still much lower than last year. Last year was 28 million. Now it's 4 million. Okay, last year it's this 13 million of inventory, and this year it's a negative 6 million. So if you actually, that's a $20 million difference right there. And that kind of explains why it went down 23 million. It's really inventory. So they spent a lot of money on inventory in 2023, which isn't a bad thing because they sold a lot. No, actually, no, the opposite. They bought a lot of inventory. I mean, they sold a lot of inventory in 2023. They sold a lot. But this year, they bought a lot of inventory. The amount they bought in inventory was 6.4 million more than they sold in inventory. So that's why it's a negative. Okay, they acquired PetCare RX. That was a big cash outflow, 36 million. Hopefully that leads to a lot more growth in the future. That just gives them access to more customers. PetCare RX. So I think it's kind of like a. Did anybody see that? Now, Roaring Kitty, yeah. I mean, he has a good background. I think he has a CFA. I think it's a little risky though. He's still holding on to GameStop, but I know. After watching his video and him explaining it, he did a good job, and he convinced me that GameStop. But I think he's kind of like, he's so all in. He's kind of like the CEO of the company. The CEO, even though they want to sell shares in the company because the stock's high, and he would like to get money. You know, he worked hard. It's hard. He can't just sell shares like anybody else because then everybody sees it, and then other people get scared. So he has to kind of keep it. So he's kind of like in that situation. He kind of has to keep it. It just doesn't look good if he sells, because then everybody's going to be like, "Oh, you're a hero, and you're jumping off the ship." Like if you're the captain of the ship, you go down with the ship. You don't jump off on a life raft. Like that's just my theory on it. I think he would probably sell, but he has just too much. I think he likes it too. I think he likes the attention that they're. So what type of merger is the merger with PetCareRx? So I wrote this little blog. So a merger is different than acquisition. A merger is usually when two companies come together the same size and merge together. And usually one company keeps their name, the other company's name goes away. Sometimes they combine names, like JP Morgan Chase, when JP Morgan bought Chase. I worked at JP Morgan. I worked at Chase when they bought JP Morgan. I was there, I remember. Then we bought Bank One shortly after. An acquisition is not usually voluntary. It involves one company purchasing another. It's kind of the same end result, but so what type of merger is the PetCareRx merger? Maybe it's congeneric merger. It's not a market extension merger because they do pretty much the same thing. I was thinking it's a horizontal merger when I was thinking about it. The merger is typically part of consolidation between two more competitors offering the same product. Yeah, I think horizontal merger. That's what I wanted to say, but I couldn't. So they did a horizontal merger, but I never really heard many people use these terms. What type of merger was it? Was it a vertical merger, or was it a market extension merger, or was it a SPAC? You hear all the time, because SPAC is it's just like this big buzzword that everybody knows. That's why companies pay dividends. So yeah, that's true. Companies pay dividends. It helps if you own like some people get like millions and millions of dollars a year just in dividends. It's pretty amazing. Hopefully, if you work for a big tech company, a lot of times you might not get, like NVIDIA, even though they pay such a small dividend, you would have to own like $50 million of stock just to get lunch dividends. They pay hardly anything. So what do you guys think? Do you think we should re-up our? I did that with Appcelera. I kept re-upping my Appcelera. I kept buying more and more and more as it dropped, and now I'm like down a ton of money. I bought it. Appcelera, I bought it 16, then I bought it 10, then I bought it 6, then I bought it 5. I wish I did that with a good company. Now Appcelera is probably even lower than. At one point, my $5 stock was up a little bit, but now it's not even. Now it's 3. I can't buy any more. It's not even $1 billion market cap company. So So it doesn't look too bad, right? Okay, Pet Care RX. Okay, sales. Okay, so sales are up, driven by the acquisition of Pet Care RX, partially offset by a decline in Pet Med legacy sales. So Pet Med legacy sales are kind of still declining. Like they're not really adding many new customers. So they had to do an acquisition just to gain some more market share. I think it's a good acquisition. You can't keep getting smaller and smaller every year. At some point, you're just going to go to zero. So you have to acquire and try to use economies of scale, because there's usually overlapping things with every company. Like you don't need like two. You definitely don't need two. You can't have two CEOs, right? So you buy another company. There's only one CEO. It's only one of that position. It's like a CFO. There's only one CEO, one CFO. There could be multiple accountants, multiple sales reps, but even those, sometimes there's overlap, and you don't need as many. But Chewy's doing well, right? Chewy's a good stock, and I don't even use Pet Care, Pet Med Express. Well, I don't really get medicine. I just buy pet food. But Chewy's like the best company in terms of. Actually, I get my prescriptions filled up at Chewy, not Pet Med Express. You would think I would at least shop. Chewy's $12 billion. It went up a lot recently too, right? Yeah, they jumped up. They were. So in just 1 month, they went from they almost doubled. Like they were down to like $15 on April 30th, $15, and they got to 30 last week. So they doubled in 3 months from low to high. But I mean, they were really high. They were almost 120. But that's the thing. When stocks go up, like a lot of stocks go up fast. There's just a lot of buying activity. And if it's a good company, it may come down a little and then come back up. But if it's not a strong company, it's going to come down to where it belongs and settle in somewhere. Roaring Kitty pumped the stock up 40. Yeah, he right before he bought more options, like he bought options, and then he posted the meme of like getting out of a chair, right? Or looking forward to something. I'm surprised he's not going to get in trouble for that. It's kind of a risky play, but it's a good business model, fulfilling prescriptions. It's not that challenging. You don't need a ton of infrastructure to do it. No, it's a dog pick. It was a dog pick. This just happened this week. Roaring Kitty. Okay. What else? Did you guys mention any other stocks? No. Well, any other stocks we should do a DCF on? But yeah, I do like companies that deal with pets and deal with kids. Those tend to be good investments, because people spend money on pets and kids, probably for themselves. Humana. Okay, Humana. The insurance, healthcare plans. I thought they were insurance. I guess it's the same thing, right? Oh yeah, so I did 4 grocery store videos. Kroger and Albertson are supposed to merge together. It's been 2 years, so I think it's going to go through. There's been some pushback, but there hasn't been enough pushback to stop it. Grocery outlet doesn't look so great. Krispy Kreme, it used to be public company, then it was taken off. Now it's back, which happens quite a bit. $374.45. Yeah, Buffett likes insurance companies and banks, the complicated stuff. I'd like to learn more about those types of companies. I mean, I understand them, but he really does. Insurance companies too. And I worked in an insurance company for 13 years. You would think I would know a lot. But it's this doesn't look good. 2, 2.7, 3.4. Okay. So I'm at 420. They're trading at 370. Yeah, I'll be right back. Okay. Humana. Huh. So yeah, so most of their revenue is premiums. They also have services. So yeah, so bulk of their revenue, so 22 billion is Medicare Advantage. So they have about 29 billion of revenue. 22 is Medicare Advantage. Individual Medicare Advantage. Then you have group Medicare. So Medicare is their business. It's a very small amount for other like private companies or individuals who pay out of pocket because it's so expensive. It's the biggest company in Kentucky. It's the fourth largest insurance provider in the U.S. Okay. So fourth, a United Health Group, right? Berkshire. Huh. I think this is different. This is not Humana is 9. Okay, this is not just because Berkshire is not Berkshire owns insurance companies. I guess they're considering them an insurance company. Biden looked awful, right? Like he didn't know what he was doing. It's scary when the most powerful person in the world is senile. How does Medicare premiums make up lion's share and the companies refocus its business entirely on government plans early this year? Because Medicare is a government thing. So Medicare Advantage. Yeah, so it bundles Part A and Part B coverage into one plan. And it's government subsidized, right? So plans may offer extra benefits like vision, hearing, and dental services. You join a plan offered by Medicare, approved private companies that follow rules set by Medicare. So yeah, Medicare is just Medicare Advantage is Medicare plus a little more. I don't know if I want to read this. Who is the largest provider? United Healthcare offers the largest Medicare Advantage networks of all companies. So if you join a company, they may offer United Healthcare, or they may offer Humana, but they're just like they're just brokers, insurance brokers. They don't actually have hospitals. You just pay them a premium. You could have any private company go public. Which would you choose? Any private company go public? I mean, what? I mean, I don't really know. I don't really. I know, like Medline. I mean, it wouldn't affect my life, but Medline is a pretty big private company. They offer medical products. They manufacture medical products. They have $20 billion in revenue. But I don't know. I mean, I don't know if it would be life-changing for me for a private company to go public, unless it was my private company, I guess. But what's a private company? A pretty big private company that I like. I'm trying to think of like food places. I don't know. I have Kaiser. Kaiser is the best insurance because Kaiser does everything. You don't have to, everything's kind of linked together. So everybody within the Kaiser system knows what's going on. When you go to a doctor, like the doctor and insurance company are two separate companies. So then I have to go through the doctor to connect them to the insurance company. Then the insurance company have to connect them to the prescription, where I get prescriptions from, maybe CVS. Kaiser is so like streamlined. It's like you can't. If you have Kaiser, you wouldn't want to go anywhere else. It's the best. Publix. Is that supermarket? Publix? Is that where you live? Are you in Florida? They have a lot of revenue, 40 billion. It could definitely be public. I wonder why they're not public. So they work through Medicare contracts with the government. But I'm not exactly sure how, like, I think the government subsidizes. So we cover prescription drug benefits in accordance with Medicare Part D under multiple contracts. Who can use Medicare? You have to be above a certain age, right? 65. So I think most of the people who go through Humana are senior citizens, like individuals, because like a senior citizen, like they'll like Medicare would say be $1,000 a month, and the senior citizen only pays like 100, and the government pays 900. So Humana, okay, government this is how, correct me if I'm wrong, but okay, senior. So if a senior citizen, like a 70-year-old man, needs medical insurance, he may contact Humana, and Medicare is 1,000, so he only pays 100. The government pays 900. Humana gets the whole 1,000, but the senior only pays 100. Winter is coming. What's up? But that's only one person, one man. How do they scale? Like, how do they get so many customers? Because obviously, if you have, okay, do companies offer Medicare? Do employers pay for Medicare? In general, when an employee is eligible for Medicare due to age, an employer may reimburse his or her Medicare premiums only when the employer's group health plans is a secondary payer to Medicare. So I'm not sure how, like, obviously they have a lot of customers. Like, they probably have millions of people who get insurance through Humana. But how do they get all those people? Like, I totally get it. Like when like United Healthcare partners with JP Morgan, and JP Morgan offers United Healthcare to all its employees. So that's like 100,000 employees in one shot. But there's not like a big company that employs all the senior citizens. I guess it's through the government. When somebody becomes a senior citizen, they probably get a letter in the mail, like how to get Medicare insurance. And they probably list like a few insurance companies like United Healthcare, Humana, maybe some others. Say, you contact one of these companies and get on their Medicare plan, and we'll pay. It depends on the age of the person. Well, maybe not the age, but it could be depend on how much money they made. Maybe they don't pay much. So but I'm not exactly sure how they get seniors to shop with them. Maybe they talk about it. I know they have contracts with the government. In order to create capacity to fund growth and investment in the Medicare Advantage business and further expansion of our healthcare services. Okay, that doesn't really tell me much. We cover prescription drug benefits in accordance with, okay, read that already. So they have a Medicare license. So they're licensed to offer Medicare. Okay, our Medicare products, government contracts, which accounted for 86% of our total premiums and services. These contracts are renewed generally for a calendar year. I don't think we're going to get to the bottom of this. They're probably not going to. Been looking at both Global Payments, GPN, and Aptiv. They look amazing to me. Yeah, those are usually pretty profitable types of businesses, payment services. So when you have these contracts with the government to offer Medicare, it's kind of like it's a guaranteed way to make money. You can't really lose. But I'm just curious of how they maybe how they get their customers. Okay, our strategy offers our members affordable health care combined with positive consumer experience in growing markets. What? Okay, these include performance bonuses shared. They have 3.8 million members. So 3.8 million people go through them to get their Medicare insurance. Maybe it's too kind of high level of a thing for them to talk about. So you see individual Medicare Advantage. So most of their revenue is from individuals. Like if you're above 65 and then you just get your own insurance, you get Medicare. They don't have much group because most companies don't employ people over 65. Some do, but most people over 65 just don't work or work very little. I don't think I'll be able to figure this out. I think it's probably a basic thing, like where I said, like, once you hit 65, you get like a letter in the mail. Because I know, like, if you ever like quit a job or get fired or end a job, you get a letter in the mail saying if you want to continue your medical insurance, you can do it through Cobra. Is Cobra just California, or is that like a? Is that a? I think it's a California thing, right? No, it's a federal thing. Federal Cobra is a law that lets you keep your group health plan when your job ends or your hours are cut. A GoPro, a good value play. I love their cameras. I just got the 11. That stock has not done well, GoPro. It did do well for a while. $1.42. Sheesh. I can't imagine anybody wanted to buy GoPro. Like, what do you see? Like, they don't. Back to that private company going public, Red Bull. A Red Bull. Interesting. That's a standalone company. It's not made by like a larger entity. So Red Bull is Rouch. Wait, it's its own. Who owns Red Bull? Oh, so it is a private company. Red Bull is an Austrian. I didn't know it was Austrian conglomerate known for energy drinks. It is also known for what? They have a lot of revenue too. 10 billion euros. GoPro. Imagine. Do you want to buy GoPro? Really? Well, let's do the reverse DCF because they don't have the forecast is for them to generate negative free cash flow going forward. So let's do the reverse. Okay. So so their peak in free cash flow was 223 million. So the estimate, if they can just hit 26 million of free cash flow in 3 years, then that justifies their stock price today. But I think it's a sinking ship. Although their revenue is not really down, it's pretty much flat from 10 years ago. But it's still not declining. %10 whack. Yeah, at least 10%. It was such a hot stock in the beginning. It was like well, I guess it wasn't that hot. No, it was. It got when it came out, it IPO'd around 40, and that was in June 2014. And after 3 months, it doubled. Usually stocks go down after IPO. This doubled. And then it came way down. And that was in 2016. So since 2016, it's just been kind of hanging in there. I mean, it's been moving up and down, but never past like $10 again. And it did hit 12 in 2021. Yeah, there's no way I would. I mean, it's a cool accessory, a cool phone. I mean, camera. But as a business, you need more products. I mean, if this was like someone's business, who had their own private business, it'd be great. You know, you'd probably make a lot of money. You employ a lot of people. But for investing, it's just tough. Because you don't need, I mean, it is cool, but you don't need that type of camera. Everyone has the iPhone, which is a pretty good camera, or a video, or you take videos. So you can use your phone pretty easily, which I would. But I guess if I did something like this, like I did a lot of adventures, then I could see maybe some value. I actually did buy a GoPro when I had my old channel, when I did scratch offs. So I bought a GoPro and I did scratch offs. But now I just use my computer because I don't really need a camera. Because most of what I do is on the screen. So be good. Investors. Supplemental slides. That's a pretty cool deck. Revenue. I'll do it backwards. So this is 10 quarters, 2, 4, 6, 9, 2, 4, 6, 9 quarters. So 216 million in Q1 2022. Highest was 4Q 2022. And it's down to 150 million, which it was 170 million last year in Q1, and before that 217 million. Margins are also getting squeezed pretty bad. They were low 40%, now it's 34%. But it's better than Q1 2023 though. Now they have a negative EBITDA and a negative net income. They're still adding employees. What do you think about SNBN? Yeah, I don't like the banks. Well, this is the only way they'll make money, because when you buy a camera, it's kind of like you look, that customer is usually gone. Like you probably never get to see them again unless they upgrade a few years later. But getting subscriptions is really important to get recurring revenue. And they grew subscriptions up until recently. Now it's coming down, and went down quarter over quarter. Subscription revenue, 2.5 billion. Which is giving them some life to have that subscription model in there. Because without that, 2.5 billion subscriptions. How much was there? It wasn't much. It was only a fraction of the revenue. No, 155 million revenue, and subscriptions was. This doesn't make sense. Okay, it's down here, the dollar amount. 25 million. This is the number of people with subscriptions is 2.5 million. and they generated 25 million of revenue. $155 million. So it was a pretty big chunk of their revenue. 25 million was like, like 18% of their revenue. CAGR, I think that's a CAGR of 7.81. Are you just calculating that? How did you come up with 7.81? I mean, it's a pretty good growth, but it's kind of stabilizing now. This is not what you want to see. Usually these things just kind of go up and up. It's kind of like 3 straight months of nothing, 3 straight quarters of nothing. But, they may have tricks up their sleeve, do more marketing. They may acquire somebody so that can improve. It's still, 2.5 million people. It's not like a handful of people. That's a lot of people subscribing to your product. So hopefully they can monetize that even more, upsell them, or whatever it might be. Oh, you did a CAGR calculator? Okay. Oh, look at you. Pretty crafty. So CAGR, compound annual growth rate. What's the CAGR formula? I always like to try to do it myself so I understand it better. CAGR, it's ending value or beginning value over 1 divided by time. Susan Burns. Oh yeah. I always remember that name because I work with Susan Burns for a long time. Woof. Well, thanks for the donation. Petco. Look at another pet. 1 billion. As I say, just stick with stocks north of $1 billion. Even $1 billion is kind of low, but like once you get to these stocks, a few hundred million, it's just so risky. A Roaring Kitty. Okay, if he's involved, I'm in. What do you guys think of Petco? That's more of a brick and mortar play. I'm sure they do online too, but it's mostly brick and mortar, right? The new CEO has changed everything. This doesn't look so great. 63, 13, 19. This might not be a good result. Well, even based off of these numbers, which aren't that great, there's a 13% whack, it still looks undervalued. And they don't really have to do much to get to that. Considering they were 169 million of free cash flow. Even last year, 124 million. They did report negative, which I wonder why it was negative. Petco. The thing about like this type of retailer is like I get a little concerned with retailers because of all these, people breaking in and stealing stuff. I don't think many people are going to steal from Petco. I think when people steal, they're looking for probably things for themselves, not for their pets. I get my dogs groomed there. Always a good experience. Yeah, no, it's a good. Like I said, selling pet items is great. People will spend on their pets. Didn't they merge with somebody, another big pet company? They probably do prescriptions, right? At Petco too. Petco closed all operations of its Dr. Forster and Smith subsidiary, and filling prescription. So they don't do prescriptions. Okay. Legal issues. A 10-year-old boy died when he contracted a rat bite fever from his pet rat, and his family filed lawsuit against Petco. So those things are kind of silly. I wouldn't say silly, but in June 2010, prosecutors from Marin, LA, San Diego, San Mateo, and Santa Barbara counties announced that Petco had agreed to settle $1.7 million consumer protection settlement lawsuit. But I wouldn't worry about lawsuits too much. Every company gets sued. It's just part of doing business. I do like the business model. I think Chewy's a better play. There's less risk, and they're really gobbling up the market share. But they're all not doing they're not like Chewy's doing probably the best because they're, how much are they? 13 billion market cap? 12 billion. They're all decent size, but they're not massive companies. They'll never get to like the 200, 300 billion market cap levels. But so sales have gone down quarter over quarter. Huh. That's good margins though, right? 1.5 billion. A decent margins. I thought I misread that. Consumables like pet food is their biggest. Supplies, and then they have services. You get your grooming, or you can get I don't know, maybe other stuff too besides grooming. I bought online from Petco a few months ago. I won't do Chewy anymore. They have trash products. The only thing I get from Chewy is my vet prescribed certain dog food for my dog. But actually, we're not buying any more dog food anymore. We're just cooking him human food. So we make chicken, sweet potato, sometimes salmon, and we mix it together. Because he only has a year left, maybe, so we're just gonna give him. My cousin says the new CEO is leaps and bounds better than the prior. Petco CEO Michael Mohan. The company has reported consistent growth. It's hard to know whether a new CEO will be good. I guess you look at their history, but it's kind of like a resume. If you interview somebody and they give you a resume, it's always going to look amazing. Wow, this is you've done all this stuff, but sometimes then when you find it, if you hire them, work with them, you find how they really are. It's like the resume is obviously going to say as the best you can possibly say. And even some people might be good on interviews. So it's hard. I have a hard time like figuring out, because I think pretty much every CEO, if you read their bio, is going to sound impressive. Probably everyone. And I wouldn't say they're even lying. I bet you could probably make it fudge a little bit. Like you can't lie about where you worked in the past or when you worked there, but you can like make it sound a lot better. So he's been on a board of directors since 2021. He also served as he was president, chief operating officer of Best Buy. That's good, right? For 2 years. I wonder why it was only 2 years, but we're responsible for operations. Okay, so he's at Best Buy longer than 2 years. From 2004 to 2019, he served in various leadership roles at Best Buy, overseeing services, customer experience. So he was in various management positions for 15 years. Then he got promoted to chief operating officer, a president and chief operating officer, which is a pretty good title, right? But only 2 years. I don't know. I'm not saying that's bad, but I wonder why he worked there 15 years as just a manager, and then he got to be president 2 years. Prior to joining Best Buy, was president of merchandising for Good Guys. Okay, yeah, sounds good. Oh, he's the interim chief executive officer. So he's not like he's not the long-term play. Interim means until they find until they find the right candidate. Isn't that just like to fill the position until they find the right person? I thought that's what it meant, interim. Or do they hire someone else? Interim CEO is a person appointed by a company's board of directors to assume the role of CEO during a time of transition or as the result of the sudden departure of the company's previous CEO. So I guess it could be long-term. Unless they're hiring someone else and this guy is leaving soon. Am I this updated March 24th. So maybe they hired a full-timer. Who is Michael? Do you know Susan Burns? Maybe you're following this more than me. Who is Petco's CEO? Yeah, I don't know. I don't know. He's got. Could you do Comcast? Okay, so if it says interim, they have not officially been given the title CEO, but they assume responsibility. Okay, so he's not. So I guess they're still looking. Interim CEO is often called to steady the ship in periods of great turmoil. Interim CEO is often named when a company loses its CEO unexpectedly. Generally, an acting CEO is one that CEOs for a defined period of time. An interim takes on the CEO position for undefined period of time, usually until a new CEO is appointed. So I guess time will tell. Tesla. It's coming back, right? 200, 630. It's always been overvalued, but I wonder if it's going to be undervalued. I doubt it. I don't think they generate enough cash flow to justify whether. I think they're like a 300 billion market cap company. I think that's where they belong. 269. So a lot of growth for the future. They'll never be undervalued like all these other tech stocks. I'm going to take notes. Tell me what to write down. I have a high whack. I thought it'd be lower. I'm going to give them 10. It just doesn't make sense. Why? Why do people buy this stock? They were. Oh, wow. Somebody gifted a membership. I think that's the first time that happened. I'm not even sure what that means. I guess you're buying a membership for somebody else. I guess that's what it means, right? I don't even know how to do that. I'm not sure what I get for it and what somebody else gets. Well, that was really nice. So they did hit 9 billion in 2022. Now they're down to 1.4 billion. Let's $630 billion market cap. Let's just double these numbers for fun. So we're going to double what analysts project. And it's still so far off. So I think, and I said this, I've been saying this for a decade now. It's just I'm giving them the benefit of the doubt, saying 300 billion. I don't think they're worth 300 billion because they hit 9 billion. Let's just say let's say they get back to where they were at their peak. So they're a $238 billion company. So they were 1.1 trillion at that peak, maybe 1.2 trillion. They were in December 2022. They weren't quite half where they're at, but they were at 600. So they were at 400 billion. I think 400 billion is about. 300 billion. I think where they belong. I calculate 238 billion, but no, I calculated 185 billion because you have to discount the cash flows. So they're a $300 billion company. But yeah, but it could hit $1 trillion, right? It could hit 10 trillion. Who knows? The difference is, the only difference is they already hit $1 trillion. If they never hit $1 trillion, I think it's possible they could hit $1 trillion. But they already hit $1 trillion, and they proved that they don't belong there. They don't belong in the $1 trillion club. And the market has made it quite clear they don't belong there. They cut their value in half from the peak. And I'm not saying it can't get back up there. But I don't think it will. Because investors buy on the future. So people thought the company was going to keep growing, and it was going to be $1 trillion, $2 trillion, $10 trillion, but it's not doing that. It's not growing. It's actually coming down a little bit. And I don't know if you follow EVs. I mean, their revenue peaked in 2023, which is, I didn't think they would get that high, 100 billion. It's coming down. And that doesn't mean it's going to come down forever, but that's not a good sign when you come down. But it didn't come down much. And their free cash flow is getting low too, 1.4 billion. It was almost 8 billion. But do you realize, like, EV cars are not what they're cracked up to be? They actually there was a study, like an official study, that EV cars have to get repaired more often than ICE cars. They need to go to the shop for significant repairs more often than regular cars. And pretty much companies that make EVs, they don't even make any money. Or they make very little money. It's if it wasn't for subsidies and a tax benefit, it would be almost impossible for EVs to even be around. It's kind of like an airline. Airlines can't really make much money either, but the government wouldn't let them fail, because without airlines, we would like fall apart. Aren't they more than a car company? So if you think they could hit $1 trillion based off of market sentiment, it's not going to happen. They have to prove themselves for the first time. You can hit $1 trillion without making any money, but you can't stay at $1 trillion unless you make money. Because at some point you're going to have to be profitable and make enough money to justify your stock price. But I could be wrong. I mean, I was wrong on NVIDIA. Well, I didn't think they were going to struggle at all as a company, but I didn't see them ever getting this big. I obviously would have invested in them. But I guess you can't invest in every company, right? You got to pick your battles. It's so easy to look back and like go, oh God, I should have bought more. I should have sold. Wow. So this looks pretty undervalued. I'm at 1,600 and they're trading at 1,000. Let's see what Simply Wall Street says. Wait, 97. Okay, I wrote the. Okay, I'm at 155. They're at 97. Simply Wall Street's at 177. I'm at 156. Analyst target is 145. The analyst target was 177 in 2022. Now it's 145. So they had a massive run up to 217. And there's always going to be a sell-off. That's the thing with NVIDIA. There's going to be a sell-off. It's just, when is it going to be? It has to stabilize at some point. I'm not saying it won't go back up. But like, if you look at like any stock like Apple, Meta, it does stabilize, and people have taken profits at some point. But it looks like it's too much downward pressure. So it's been 3 years of stabilization, and now it's trading at, so June 2024. It's 100. So, I mean, it was 107 years ago. So, and if you look 7 years ago, so in 2017 it was $100, and so they went from 3.3 billion. They tripled their revenue, and the market, and it's still same price 7 years ago. I mean, it did go up. As the stock was going up, it did go up, but then so this is a good exercise. I wish I could get it a longer time frame. I guess it doesn't matter. They make an acquisition. So I wish I could get from 2014. It would be so much better. Okay, this is it. Okay, so the top is the revenue, and the bottom is stock price. So you can see how low the stock was, under $50 a share, and revenue is here. So you can see how much the stock price goes up. So it pretty much, the stock price moves with the revenue up until this point. Like, it goes up from 2014 to 2021. But you see how the revenue continues going up, but the stock price goes down? Because people are buying it not based off of the actual fundamentals. They're buying it before. So like at maybe this point, let's just pretend the market's perfectly efficient. And $100 stock price is equivalent to 10 billion market cap for this company. So people here in 2018 also paid $100 for the stock, as you do right now today. You can pay $100 today. When the revenue is $4 billion, right? They were paying the same price as you are. So they were willing to overpay. It was probably like a, like a 50, a 75 PE. They were willing to overpay based off of the growth of the company. But at some point, like say it belongs at 100. And even though it's going up, at some point it has to come down to stabilize. The only way it wouldn't come down is if the revenue went up, like Nvidia's going up like a crazy amount. So, but that doesn't mean it's not going to go back up. If they make the right moves, acquire the companies, they'll come past this $200 level. But they're not going to do it at 10 billion. 10 billion is probably where they belong. Comcast and Charter are two other companies I'm long on. Yeah, but it's just, who knows when the right price point. I just know people overpay, investors overpay for stocks, hoping for a big growth in the future. But it's okay to overpay as long as you get out before it comes down. But too many people overpay up here, and they never make money in the stock market because they overpay and then they're down 50%, and after like 6 months or a year, they just sell at a loss. And so either you have to get in or you have to hold it for a long time. Yeah, the greed index. So hopefully you got in at a good point, but you're getting a dividend, which is better than nothing, because even if you got it down here and you're flat, you still made a little money on the dividend. But well, it's 2.5 hours. It's a long time. Okay, well, yeah, it was a fun stream. Thanks for joining. Thanks for the donation and the membership. Buying a membership. That's the first time somebody's done that. Yeah, I'll probably do tomorrow, I think. So have a good night. Okay.